Eric Muathe, Muathe.com. Let's take a look at US markets here, and with part 1 we can see that the US markets closed at record highs for the Nasdaq, Dow and S&P 500. Let's take a look at those charts. Pretty much to understand this video, you have to take a look at my playlist, which is on YouTube, and the playlist is entitled RSI 30 and 70 levels explained, and I should have this in the description of the and I should have a link in the description of the video sending you to this playlist, so check that out if you have some time, because what I'm going to be talking about this video for the most part is this number here, 69.1, which is the RSI level. It's very important. For example, we can see that the Nasdaq is now back above 69.1. As long as it is above 69.1, you can see what happens to a market. So as long as the Nasdaq is moving its monthly RSI above 69.1, expect the market to be stable to outright bullish, which is exactly what we are seeing. In fact, if you take a look at a 5-year monthly chart for the Nasdaq, we can see that here in 2013 it moved its RSI above 69.1, and that is just a perfect example of what happens when markets are holding above 69.1. So from 2013 throughout all this phase, the Nasdaq was holding above 69.1 on the monthly until somewhere here. So you can see what I'm trying to say here is if the Nasdaq stays above 69.1, chances are this market is gonna continue improving and seeing record highs as we go into the next couple of months. So this is a big deal. Above 69.1, and this market remains on fire. But since I'm going to be mentioning this number a lot in this video, it might just make sense to explain where this number comes from briefly. There's many ways we end up with this number. Now most charts are going to use 70, but I can assure you it's 69.1. Most charts that you look at have 30. I can assure you it is 30.9 is the exact number. But how do we end up here with 69.1? There's a couple of ways you can get to that. Number one, keep in mind we are using RSI levels based on the Fibonacci number of 61.8 and 38.2. So everybody knows where those come from. They're the Fibonacci numbers. So that's 100%. Let me just put that to be 100%. So a couple of ways. Let's do this. 61.8 divide by 2, what do you get? You get 30.9. Remember I told you this 30 level is 30.9? That's where that 30.9 level comes from. Now you take 30.9 plus 38.2. What do you get? Equals 69.1. That's one way you get to 69.1. So that's check mark, right? Another way you can do that is let's take 38.2 divide by 2. We get 19.1. Now this 69.1 is actually 50 plus 19.1, which again we end up getting 69.1. So there's many ways you can get to this. I've just shown you two. Where does the 50 come from? 50 is halfway, of course, between 100 and 0. So 50 plus 19.1 gets to 69.1. That's just two methods. There's many ways you arrive at 69.1. But the moral of the story is this is a big number. So let's move on here because there's a lot to cover in a short time. Take a look at the Dow and take a look at the monthly chart for the Dow. Monthly chart for the Dow continues to be trading above 69.1 since about end of November during this month. And as we can see, as long as the Dow is holding above 69.1, this is the type of action we are getting. No surprise. Take a look at the S&P 500. S&P 500 also, take a look at this move here, moving above 69.1. As long as it's trading above 69.1, you can continue expecting an explosion in price action. And it also means that you can get shallow pullbacks, but as long as the market is holding above 69.1, expect the market to be very strong. As an example, this is the S&P 500 between 1994 and 2000. Take a look at what the S&P 500 did here in 95. It moves its monthly RSI above 69.1. We know what happens when that is the case. You get this explosion from 95 all the way until this break here in 98. And then it recaptures it again here during this phase up to here. So pretty much what I'm saying is holding above 69.1 is the key to this current market environment. Take a look at the S&P 500 between 2013 here when it breaks out and stays above 69.1 pretty much until somewhere here. And that took about 2 years, so 2013, 14, and into some time middle of 2015. Other than this short period here where it recaptured it immediately, for the most part S&P 500 was holding above 69.1. Obviously, if you are to make money in the market during this time period, you are better off playing the market to the upside. So right now we are back above 69.1, which leaves us with one option: to be very careful about the potential for higher prices. And we can see this market is responding to that level because it is already picking up momentum. Keep in mind we had pullbacks during this phase, but they were always shallow. The trend was always to the upside as long as S&P 500 was holding above 69.1. And go back to that 1994 chart again. So 1994 to 2000, same type of analysis here. S&P 500 moves above. Now keep in mind this is at a price range of under 500. So 500 here. It stays above 69.1 until this period here when it's trading or has traded as high as 1100. So that's a substantial move in a couple of years, and the market held above 69.1. And even though it held above 69.1, there were shallow pullbacks, as you can see. Shallow pullback, shallow pullback, shallow pullback, sideways market here, breakout, shallow pullback, new highs. So yes, the market can pull back, but it's always going to be shallow as long as the market is trading above 69.1. Take a look at the Nasdaq on a weekly chart. And the Nasdaq on a weekly is holding above 69.1. As long as the Nasdaq is above 69.1, expect the market to be bullish to stable. Take a look at the Dow. As long as the Dow is holding above 69.1, in fact the Dow has been holding above 69.1 since this period here. I think it is actually in December. So since here, the Dow has been holding above 69.1 on the weekly, which might explain this nice uptick. S&P 500 weekly. S&P 500 is now back above 69.1. As long as it remains above 69.1, expect the market to be sideways to bullish. Take a look at the S&P 500 daily. S&P 500 daily is holding above 69.1, which might explain this explosion this past week. Take a look at the Dow. And the Dow daily is back above 69.1, which might explain this explosion this past week at above. Staying above 69.1 is key. As long as markets are holding above 69.1, you can expect higher prices. Take a look at the Nasdaq on the daily. Nasdaq daily has been holding above 69.1 since here. And what we saw after moving above 69.1, we saw an explosion in price action. It closed the week above 69.1, which means it is still strong. Let's take a look at the Nasdaq hourly. And here on the hourly, just to be clear, I'm using RSI setting of 26. On the hourly, Nasdaq holding above 69.1. This is a rare occasion where markets are trading above 69.1 on all time frames. That's why they refuse to go down. Take a look at the SPX. No, let's take a look at the Dow. The Dow continues to hold its. In fact, the Dow just did close, yes, back above 69.1. Has been above 69.1 over the last week or so, which explains this explosion in price. And SPX on the hourly ended the week also back above 69.1. So the only way this market starts pulling back, the only way is we have to start moving away from 69.1. If the market is above 69.1, especially on the monthly and on the weekly, expect this market to be bullish. There's no other way. In fact, it's as simple as it gets. Above 69.1, this market is ultra bullish. If the market corrects itself and stays and holds below 69.1, then maybe we can start looking for a pullback. But for now, with all this weeklies, monthlies, hourlies, dailies, man, as long as they are all holding above 69.1, chances are this market continues to be strong. Now, one thing I can say here is there's a possibility, because we close at fresh hourly closing highs there for the S&P 500. Right now, we can see the possibility of a lower high. In other words, we are seeing the first sign of negative divergence, which might set the stage for the market eventually pulling back. Now, which means that the hourly would have to be below 69.1 to even give this market a little bit of a breather with a pullback. But as long as the monthly is above 69.1, it's going to be a shallow pullback. As long as the weekly is holding above 69.1, it's going to be a shallow pullback. Eric Muathe with Muathe.com. Subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we are going to discuss commodities, and we are going to take a look at some stock picks and also take a look at some ETFs that you can own. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Whoop.